This is an uncovered Japan company research report on Nippon Chemi-Con Corporation, ticker 6997. Japan's oldest aluminum electrolytic capacitor maker controls a difficult foil-to-finished part process and supplies power-critical components for artificial intelligence servers, vehicles, and industrial equipment. The technology and macro exposure are strong, but a rapid share price re-rating, weak margins, and a scarred balance sheet make execution decisive. The report is dated July 7, 2026. Fiscal 2026 revenue recovered 11.5% to 136.8 billion yen. But the operating margin was only 2.5%. The equity ratio rebuilt to 37.6%, while an accumulated deficit of 24.3 billion yen still blocks normal profit-funded dividends. At the report date price, the shares traded near 1.6 times book after roughly a 2.3 times run. A capacitor stores and releases electrical energy, smoothing unstable voltage and protecting sensitive electronics. In an AI server, it sits close to expensive processors and stabilizes high current power delivery. The same function matters in electric vehicle inverters, renewable energy systems, and industrial drives. Nippon Chemi-Con is highly focused. Capacitors generate about 91% of sales. That specialization supports deep process expertise, but also ties the company directly to one cyclical component market. The end market mix is broad enough to provide several demand engines. Automotive contributes 36% of sales, industrial equipment 26%, and information and communications technology, including artificial intelligence servers, 20%. Together, these three markets represent 82%. Automotive and industrial demand can be cyclical, while AI server power supplies are the fastest-moving growth narrative. The quality of the recovery, therefore, depends on both broad industrial normalization and durable data center orders. Nippon Chemi-Con's Moat is vertical and process-based. It controls the formed aluminum foil, electrolyte chemistry, and finished capacitor assembly, instead of buying the most sensitive input from outside. Large, high-voltage capacitors require exceptional consistency, and that know-how compounds over decades. Customers also qualify critical parts over long cycles, making substitution slow and risky. A global manufacturing footprint places engineers and supply close to major customers. The caveat is that integration also creates fixed costs and operating leverage when demand weakens. The profit and loss record is a recovery story with unfinished work. Revenue peaked at 161.9 billion yen in fiscal 2023, fell to 122.7 billion in fiscal 2025, then recovered to 136.8 billion. Operating profit stayed positive, but the margin compressed from 8% at the peak to 2.5% in fiscal 2026. Raw material inflation, inventory correction, and weak pricing all contributed. Higher sales matter only if they restore margin. Cash flow is the cleanest sign of recovery. Antitrust payouts, inventory, and heavy investment pushed operating and free cash flow negative in fiscal 2024 and 2025. In fiscal 2026, operating cash flow rebounded to 7.6 billion yen, and free cash flow returned to positive 2.3 billion. That is encouraging, but not yet a trend. Artificial intelligence server capacity investment continues, so the company must fund growth while reducing debt and proving that new volume produces cash. The equity ratio improved from 28.4% in fiscal 2022 to 37.6% in fiscal 2026. Yet return on equity swung wildly because roughly 33 billion yen of antitrust settlements hit net income across the decade. The accumulated deficit still stands at 24.3 billion yen. That matters because ordinary dividends cannot be paid from negative retained earnings. The current distribution comes from capital surplus, so genuine shareholder returns require years of clean profitability and balance sheet repair. The 11th midterm plan follows a coherent barbell. Nippon Chemi-Con wants to differentiate in high-value, artificial intelligence server and automotive power applications, while cutting cost in mature mass-market products. A new hybrid capacitor plant is designed to scale toward 100 million units per month. Management then intends to convert growth into free cash flow, reduce debt, and improve capital efficiency. The plan's weak point is execution history. Opening operating profit guidance was missed in each of the last 3 years. Price to book is the most useful valuation lens because earnings have been distorted by litigation and weak margins. the stock historically traded around 0.5 to 0.6 times book. But the artificial intelligence server narrative lifted it to roughly 1.6 times at the report date. That re-rating recognizes the end of the antitrust overhang and stronger growth prospects. It also means the market no longer prices the company as distressed. Further gains require durable margins, cash generation, and execution, rather than narrative alone. These are the report author's illustrative scenarios, not recommendations or price targets. The bull case needs strong artificial intelligence server demand, successful hybrid capacitor scaling, and margins recovering toward management's ambition. The bear case reflects another guidance miss, weaker end markets, persistent raw material pressure, and price-to-book compression after the sharp re-rating. The central case is much less dramatic. Investors should watch quarterly orders, operating margin, inventory, free cash flow, debt reduction, and the pace of deficit repair. To conclude, Nippon Chemi-Con has a genuine industrial moat in foil technology, qualification, and scale, with powerful exposure to artificial intelligence power supplies and electrification. The operating business is recovering, and litigation noise is largely ending. But margins remain thin. The accumulated deficit constrains shareholder returns. Management has repeatedly missed guidance, and the shares already re-rated far above historical book value. The decisive signals are orders, margin recovery, cash generation, debt reduction, and credible guidance. For the full evidence, assumptions, and sources, continue with Uncovered Japan's free deep dives. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.